I am David Stein, President, CEO, and founder of Kuya Silver. We have, as Gwen mentioned, an exciting silver mine opportunity in Peru, and I'm going to focus on that today. We are trading on the CSE. Ticker symbol is KUYA, like our name, and we also are on the OTC in the US and also in Germany. Here's our disclosures. Now, this is an abbreviated version of our presentation. We've got the full presentation on our website. I would encourage you to go to kuyasilver.com, download it, and you can read the disclosures at your leisure. We also have our 43101 on the website as well. That's another good thing you might want to download. All right, but let's move on. So Bethania is our flagship asset. It's a recently producing silver mine in central Peru, and it was producing up until 2016. We got involved about a year or so later as a private company to earn in to buy it, and then we eventually bought it last year. We now own 100% of the mine. It was producing as a toll milling operation, so they've got we've got very high silver veins with silver polymetallic veins, and they were processing the ore at other lead zinc mines in the area. And so they were never getting, the best recoveries, and obviously that's more expensive, as you can imagine. So, so when we took a look at this project, first of all, we saw a huge growth opportunity. We saw the ability for us to permit and install a small plant there. And by doing so, we could unlock a huge amount of value. And that's exactly what we started doing 3 years ago, and we're well on the way now. The business plan is working. We took the company public last October, and we closed the acquisition of the mine a few months after that. So now in 2021, we're really focused on basically driving this project now through to production, completing our plant that we permitted last year. It's another thing I should mention. We got our EIA approved, and that is the major permit that you need for a new plant like what we are building. And so that was a big achievement that we did last year. And as I said, now we're moving towards development, construction. We, at the same time, will be doing drilling, growing our resource base in Peru. And as Gwen mentioned, we also acquired a new project in Ontario called the Silver Kings project that we think could be our next silver mine. So we will be doing some work on that as well. Okay, here's our share structure. We've got just under 40 million shares outstanding now. Management, very high share ownership. I'm personally the largest shareholder. So management are fully aligned with our shareholders in this journey. We've got some great mining funds and mining investors, well-known mining investors like Eric Sprott, Commodity Capital, Crescat, who are some of our biggest institutional shareholders as well. All right, our business model is really, we're not reinventing the wheel. We're really kind of following in the footsteps of some of the successful silver mining, major silver mining companies out there like First Majestic and Pan American, who started with a single mine, just like what we're doing. Now they were starting in Pan American's case in the 90s, First Majestic in the 2000s. So I think we're one of the first ones to do it recently, but that is the opportunity that we have. And by bringing our ability to bring capital now, being a public company, to this operation allows us to drill more resources. It allows us to increase production, which we're doing, reduce costs, also doing that. So really a huge benefit for this first operation, and then we can repeat the process with other mines as we grow. Now we have byproducts. Of course, almost all silver mines have byproducts. In our case, we are a very silver rich operation, though. Around 65% of our revenue at these prices comes from pure silver. And one thing I really like about these high grade vein mines is they are lower risk. So geologically, it's kind of easy to tell where the veins are going, where you need to drill next. lower environmental footprint, not as controversial when it comes to CSR as compared to, let's say, a big open pit somewhere. So it's easier to get into production, still difficult, but easier. And that is ideal when you're starting a new company. All right, so we have a very busy 2021 planned, and this is what I call our dual track value creation. There will be other silver, small cap, micro cap companies out there that you might look at who will be giving you lots of drill results. That's fine. We're going to do that, but at the same time, we're building a mine and we're getting into production. So that's what the dual track is. On the one hand, the yellow line, our development story. So we're going to be hitting these milestones over the course of the year, finishing engineering, starting our plant construction, underground development, and then commissioning towards the end of the year. And as I said, at the same time, very aggressive exploration program. We're going to be doing drilling, phase 1 drilling on Bethania. We're lining that up right now. We'll do a 43-101 resource after the first phase 1 drill program. And then we'll just keep drilling both regionally, and also we've got a phase 2 we're planning for Bethania that will be more aggressive in terms of stepping out and drilling more resource growth. Now, we also just acquired, like a few days ago, actually, this new project in Ontario, which we call the Kerr project. And so we will be drilling on that almost immediately. So we think we can generate value there as well, and aim for a resource by the end of the year. All right, the Bethania mine is very special because we're very confident that it can be one of the lowest cost producers in the silver space in Latin America. This is kind of what we're targeting, and why we are confident about that is, first of all, we've got very high grades. So our mine head grade is 15 ounces per ton. That's what it was. That's what we expect going forward. So remember that number. We're going to get even better recoveries having our own plant there. And we're able to actually produce copper and gold for the first time, whereas previously that was wasted at these other lead zinc mines that they were using. We have no royalties or streams. A lot of other mines do these days. So that's another advantage we have. And it's a very shallow mine. It is underground, but very shallow, just quite close to surface. So less haulage distance, and that helps reduce our operating costs as well. Even when this mine was producing before we got involved, last full year was 2015, their all-in costs were only $16.30 an ounce. So if you think about that in the context of some of the public companies out there, some of them produce at over $20 an ounce cash cost, or all-in cost, sorry. We're already lower than that even before we touch this thing. Now, with having our own plant, though, we can reduce the costs even further by adding eliminating the toll milling fees, eliminating the long haul trucking of the ore, getting better TCRC terms. So all those things together, we think are going to knock another, at least $3 to $4 off the cost per ounce. Here's one of our veins. So we've got a kind of a swarm of veins that all are running more or less in the same direction. This is one of the smaller ones in terms of strike length, but it's a very rich vein, actually. Veta Victoria might be our richest vein at the moment. Just a good one to look at. But again, we've got 6 or 7 of these we're ready to mine right now. And right now we drive in, and we will continue to drive in at the 670 level. That's the main adit level. One level below that, 640, where they started developing, but had to basically stop when they put the mine on care and maintenance. So there's a lot more ore there to be mined. If you think about our EIA, was what we got permitted was 350 tons per day. So that's about 125,000 tons a year at 15 ounces per ton. So you kind of run through the numbers, you'll see we're going to be producing initially about 2 million ounces, a little less than 2 million ounces of silver a year, 2.5 million equivalent. And with, $25 silver price today, we should be getting a $12, $13 margin. You can see that this will be hugely profitable. It will pay back very quickly. And obviously, we're very excited to, to achieve that and then be able to grow it from there. Now, where we can grow it, well, here's a long section of the entire mine property that we have permitted right now, which is 1.5 kilometers in strike length. All the mining's happened on this basically westernmost 300 meters or so, 400 meters. So this would be largely mined out, this area where the gray lines are. All of our historical resources, which are 8.3 million ounces right now, are at depth here, maybe a little bit on the side, some remnant blocks, but mostly at depth. And you can see we've got still spectacular high grades at the very bottom levels of the mine. That to us suggests that we've got it's going to continue for many hundreds of meters below us. We're only at 150 meters from surface here, and these steeply dipping high-grade vein mines can go 500 meters to a kilometer below surface in Peru and Mexico, similar mines like this. So we don't know for sure, but we think we've got a long way to go at depth. And of course, along strike, we have this area over here, Española Dos. We actually will be drilling this in phase 1. And then later in the year, we'll start walking this back and connect it up with the main mine. By doing that, we can double the strike length of the mine. So that alone could add a huge amount to our resources, certainly on a percentage basis. All right. And of course, the goal in drilling more resources at Bethania is not just to do it for the good of our health. We want to expand the mine again. So we'll do the current mine that is permitted, the current phase as a phase 1, and then look to grow even further in 2023, 2024, or something like that. All right. In Ontario, we've got, we'll just touch on this quickly. We've got a historical mining district that we have just acquired from First Cobalt. We acquired the red area 100%. The orange goes into a joint venture with First Cobalt. The red area has most of the drilling, most of the historical work on it. Here's a 3D model showing the underground mine workings and where the drill holes are, the historical drill holes from 2 years ago. And they were looking for cobalt. So when they were doing so, they weren't successful, but they hit some very super high grade silver, 1,000 grams per ton, that kind of thing. And that interests Kuya very much. It may not have interested them, but it interests us because that looks a lot like what we have in Peru. So even though the geology, the metallurgy is different here, the mining wise, we see the opportunity to go in, do some selective mining, high grade tonnage. And so we're going to be working on developing resources this year, following up on some of these super high grade intersections that First Cobalt hit. And we can start that more or less right away. So you will see us do that very soon. Here's our management team. Won't spend a lot of time on this. You may know Quentin Hennig, he's our chairman. But basically we've got Peruvians and Canadians and Americans on our management team, all great people. And that's it. Last thing I would say, head to our website. You can sign up for a meeting with management on our website. And we're also very active on social media. I'm a big proponent of silver, and we're quite active on Twitter and stuff like that. So if you're interested in that, check us out there. Thank you very much.